Live from Music City, Nashville, Tennessee. This is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of the afternoon swing trading floor with your humble host, Jeremy Alexander Newsom, with another daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. What's going on, friends and fam from around the world? Hope everyone's doing deliriously delicious. It is Monday, Merchant Monday in the building. My friends and fam are here. Eric, Sharon Baldwin, Neela Patrick, Stephen King, K-Rob, Don, Bill, the Sergeant, Tony, Angela. I'm loving it. Ba-da-da-da-da. All right, let's get into the markets and chat what we have to chat about. So much going on. So much goodness. You know, the stocks that we got today. On the SPY, this wick is not entirely correct. I don't know exactly how long it'll take for that to update. I actually prefer that candle. I was kind of hoping that data was correct, but the low of this wick, according to the daily chart, is 271.35, but the 5-minute chart is not even quite that low. It's made it down to 272.60. So just throwing that out there. I don't know how long TradingView will take to fix that. That happens on a few different platforms that can occur. But I do like the candle, either like it is now or the real candle. Both look pretty decent. So I'm expecting for a continuation higher. People like the Trump trade deal, China thing. You got this little pennant pattern. I said back here somewhere that the market should be responding pretty bullishly to the North Korea news about them no longer being giant a-holes and everything should be okay in that spectrum. So, the market's responding. There's a lot of good news out there, nothing too arduously crazy. So the big level for us to take out, or at least that's what James Gerard told me, is going to be about 274 and some change. So you have the nice little gap over here, good upper shadow, and you can see we've battled with that price. What I would love is tomorrow, trade sideways, like an inside day candle, and then a pop on Wednesday. That would be nice. But I do think we continue higher. I still think the market's making new all-time highs. If not this year, almost for sure next year. But this year, it looks very pretty. I like the fact we're bouncing off the long-term moving averages. The weekly chart still looks really clean. So let's go. Sharon says, Donnie is in the building. Yes, I love it. Here's the IWM, and the IWM is at new all-time highs, breaking out. Looks good. What bear markets? I read so many emails over the last 4 to 5 months, right, James? Weren't we supposed to go to zero? Wasn't the market supposed to collapse? I read that somewhere. So anyway, the IWM, just a good-looking trends. Things are happening. Buy the dip, I guess will be the analysis on the IWM. Nice-looking trends. Here's the Dow Jones ETF, and the Dow Jones is up 1%. Again, this is a really pretty gap today. Let's not discount that. So we break above this resistance. We gapped above the 100. It looks nice. We have a few candles. Again, I don't mind if we retest some this week, but this gap still says to me that we have some farther moves ahead of us. We have some direction that we can go. So I like the gap on the Dow. Mila said, is it a retest gap? Pretty much, yep. And the Qs, a little bit of a gap. We're just hanging out, still kind of flag patterning on the Qs off the 10, so we'll see what the Qs do. Here's the 5-minute chart on the Qs, and the low it came down to is 167.68, and that is accurately represented on the daily chart. So I kind of like the candle. Again, if we get an inside day candle tomorrow and we pop higher on Wednesday, it makes sense to me, and I am totally cool with that time frame. Time will tell. So that's my thoughts. Let's go look at ACAD. It's first on the list. This is one of our swing trades, and did get stopped out today on ACAD. It just didn't quite have the magic. So what happened on this one as far as the chart's concerned, right? You had a nice little retest gap right there. So we were in that trade when that gap happened. And then the next day it retested. And then the next day it still retested, but you were still above those moving averages, as you can see. The next day, when it broke below that moving average, that's when I was like, well, I guess it doesn't look like it's going to work. And then you got, if I come in here to the hourly chart, here's the hourly on ACAD. Move this over here. So the hourly chart, you're below all the moving averages. It kind of looked like some type of head and shoulders pattern almost. You had a nice high wave candle on Friday to kind of start the day. So there was definitely, in my opinion, some support right about there. And it just didn't break down. So, you know, or I should say it did break down. It did not break higher. So bottom line, I talked about that one earlier this morning, moved up the stop to 1778, right below that doji. It's now back below the moving averages. And I'm going to put that one on my list tomorrow morning. I think you could get a little bit of a follow through on this one, possibly. So if it continues or gaps down or something, I'm going to watch it to go, you know, to trade bearish. So, you know, we got stopped out, update on the worksheet. We lost really small on that one, and that's okay. Let's take the money somewhere else where it's, you know, where it wants to be more respected and does better for us, and to kind of move on from there. So that is ACAD, closed it down, 1778 was the effective exit, and again, 0.2 R loss. Sharon says, is there a head and shoulders, knees and toes pattern? There should be. This one, if there is going to be one, this one could definitely be it. That is very true. So ACAD, out of that one is a swing trade. Tried it, just didn't work. That's going to happen. And again, it was a bullish trade. It wasn't like, you know, the market wasn't moving higher. Blue Apron, APRN, up 6% today. Nice looking move on Blue Apron. This is the one that we talked about right when I was going on my cruise back over here. The markets would not let this IPO just go to zero. And this was the big breakout candle with volume. You had earnings gap. So this was a nice earnings gap. I mean, look at that hammer. Gap and go, shave top, closing above the 50. So even if you did not hold over earnings, that was a good sign to kind of get back in. And had a good little rotation, moved higher, rotated back down to the 10, bouncing. Nice little S-curve. So shout outs to Andrew Foster's girlfriend, Taryn, who this is one of the stocks that after we chatted on the cruise, she ended up buying based on some technicals and some fundamentals and things of that nature because she likes it. So here's the 100, and Blue Apron did make a nice move above that level. Really, really good move. So, you know, if you're in Blue Apron, you want to be in Blue Apron, here's how I would be if you're not. If you're looking at getting in, and again, you by no means have to take this trade, but here's your resistance. It broke above resistance, old support, new resistance. I like this pennant pattern. I would just look for a buy the dip opportunity. So just create a limit buy if you're not in and snag it on a pullback. Short-term target will be the 100 simple. But for some of those traders that, you know, if you want to say, hey, I'm going to throw a few shares at this one and just let it do its thing for a little bit, that's also pretty conceivable. So I know my buddy, I think David Webb is in this trade as well, longer term. So you could get into some shares with the stop at like $1. It's a $2 risk, right? And for $2, you could say, all right, well, it's a $2 risk. You know, let's say your R is 500. That's 250 bucks, 250 shares. And then the risk reward is pretty solid. It's pretty solid. So I'm not saying you have to take this trade. That's just the technical analysis of it. There are a few of you who are in. There are a few of you who are not. I'm not in personally, but I missed the boat on that one. I don't have a subscription of Blue Apron, but some people do. Some people like it. It's a very interesting IPO play. And let's give you one other, like, hey, this could be a cool situation. Here's your RSI on a weekly chart. So RSI on a weekly is making lower highs and making higher lows. So there is some divergence. So that's kind of another little bit of a, ooh, that's a really cool signal. So just understand your time frame. This thing is IPO'd about a year ago. More than likely, it realistically could do something like this. for a bit before going higher, kind of like ETC did. So if you want to trade Blue Apron, I think do a lot of research on ETC's wave pattern and kind of what ETC did. I think there's a lot of similarities to be had. So you can see ETC pretty much the same time frame too. IPO'd in May, and about a year later was right about here. So I could see that happening on Blue Apron, this almost exact trend. So just do your analysis. It's very inexpensive. The more analysis you do and the more you like the company, the more fundamentally sound it is, you can still risk a certain confined amount of risk, but you can make a really nice longer term play on that one, invest a little heavy, have a nice stop, know where your risk is on the trade, and if it works out, 2 years later, which is kind of the time frame I think it will take realistically to really just rock out, you could have a pretty solid gain on that one. That's a 300% gain if it goes back up to $10. So just something to, factor in as you're doing your analysis. So that's Blue Apron. Okay. Sharon said, is it too late to get in? Nope. Angela said, I'm in longer term as well. Gorgeous. All right. I love it. All right, let's go check out FOSL, FOSL. And this is another one that looks like it's trying to get out of some accumulation. So look at this pattern on FOSL. I'll just turn off the RSI for a second. Look at this hemorrhaging. Getting wrecked. This thing traded down to $10. I mean, it went from 140 to $10 in the course of a year and a half, 2 years. And this is one of the few charts I've seen. It did it about as fast as it went up. Am I right? It's pretty close. Kind of interesting. So now that we're down here, you get this resistance, old support down here. It kind of bounced off of that. Bob bought some longer term shares. Some people are doing some put sales. Remember, it comes down to when you're investing, right? It's all about time frame. I met with a really good trader this weekend. One of the Benzinga hosts who does the pre-market prep, Dennis, and that guy loves trading. And we were just talking about trading, and the second or third question he asked me about trading was, so man, what's your time frame? How do you trade? And all traders, really good traders need to know their time frame, because it comes down to what are you doing with it? And I repeat that over and over and over and over. Like if you're trying to make shorter term, investment, quick gains, quick moves, there's a time and a place for that. There's also a time and a place, so there always should be, for 3 to 4 years out. And you have to remember that I can get excited about a lot of things. I can get excited about a lot of patterns. I can get excited about a lot of companies. Doesn't mean you should be investing in all of them. Always remember that there might just be, if I look at 160 different stocks every single week, there could be 2 of those that you really like long term, 2 of those that you really like short term, and that's only 4. So in that same instance, 2 of those long term, if I look at 2 companies long term that are really nice every single week, every week, that's 100 a year. You're still not going to go into every one of those, right? Look at them, pull them out, do some research, find out their CEO, CTO, CFO. What are they doing? What are they buying? What are they selling? How much debt? How much cash? Articles that you like? How are their products? Do you like their products? Go buy a product. See if it's good. Go to FOSL. Shop there. Do you like it? And if you like the whole experience and you're in, so to speak, then yeah, buy some shares. And it can depend on, again, you can calculate and determine how much is your risk going to be, how long you're going to be in. You can determine all that up front. But especially when the things are nice and cheap, you're like, okay, well, if it goes to 0, I know my absolute cost, but the upside is, pretty large. So always something to take in mind. The long-term trading should be pretty easy because you just buy it and let it do its thing. That's really, just get in and just forget that you own it for a while. So back to FOSL, FOSL. This had a really nice retest gap, and there we did play this one. Was the, unfortunately it's not the right term, but here's the Y candle gapped up. We got in around here and got out for a short term, right? That was a very short term move. On a longer term level, had I gotten in here, my stop would probably been, down here somewhere. I would have just let it ride. Just let it do its thing for a bit. So at this point, this is realistically a new 52-week high today on FOSL. That's kind of incredible. Here's your exponential moving averages. The pennant pattern looks good. You know, if I was looking at taking FOSL, I would just simply buy a dip, and it could be around 18 bucks or maybe off of the 50. But this little bad boy is trying or doing its best to make a little bit of a recovery, it seems. Walmarto, WMT. So longer term, everyone knows what Walmart's doing. This pattern for the last 2 months has been really difficult to trade. Very difficult, just trapping a lot of people. So on Walmart, I mean, just again, be cautious short term, long term, let it do its thing. I think if you want to hop in, the way I see Walmart on a short term level would be kind of like a day trade or very quick swing trade approach. So here's the 15-minute chart, and you have a little bit of a resistance right here. So if she can pop out of here and retest, she'll slowly go a little bit higher. But it has been very trapalicious the last 2 to 3 months, maybe even a little bit longer. The earnings play was real easy. I feel like just sentiment. There were so many white candles in a row. We had 4 nice white candles in a row, and it gapped up to the 50. You know that some people got trapped down here from the dividend gap. So just trade up and then bloop, rotate it back down. So anyway, I mean, short term, I'd look to be slightly bullish. Obviously, long term, it's Walmart. So I mean, it'll go higher eventually. Here's your long-term moving averages on the weekly chart. I do know some traders who did a put sale or two down here over earnings, and they've bought that one back. If you want to consider doing it again, there's a little bit of premium in there, but that's, it's Walmart. So don't expect to get real rich off of those put sales. Otherwise, that's pretty much what I got. Dan says, I know all about that trap. Yeah, man. Same here. All right, cool. Next on the list is Target, ticker symbol TGT, and Target. Here's the weekly chart. I forget who's all in Targets, so I apologize about that. But I know earnings is around the corner. This is a kind of a cute double bottom. So let me throw in this guy. Green earnings box, something like that, and then pop down here to the daily chart. So if we gap down to there, we should be okay. If we gap down below here, which I don't think happens, it'll be relatively bearish, probably. I don't know why it keeps doing that. And I mean, the bigger we gap up on Target, if we get a big gap, it would probably fade. So I'll draw something like that, and I'll just go back to the daily. If it gapped up, it probably would trade down and then bounce. Pre-earnings analysis on Target. She looks good. If Target gaps into the green zone should be viable for a swing trade, maybe even day trade. If Target gaps up, which is likely, I'll be looking for a fade and then a retest. But if Target doesn't fade, it is a strong level to breach. So Target could keep running. And if Target gaps down into the red box, I'll look to day trade it, bearish, and then look for a longer term play of some magnitude. That's pretty much it. Okay, target. That's pretty much what I got. And I don't remember the last trade I posted on target publicly. That was really it, the last one. Okay. Got it. So that's just one I guess we could have on the list. Perfect. All right, what do we got next? What do we have next? We got Spirit Airlines. Ticker symbol SAVE, Spirit. And the airline sector today had a decent little bounce across the board, except for really Southwest. Southwest was the one that didn't come to the party for some reason. You do have some support on Spirit around this 34 area, and it almost got down there. This is the discount airlines, as most people call it. I actually kind of like this trend. That's nice. It's a nice looking trend on Spirit. Obviously, this is a monthly chart, so it'll take a little bit of time. That's a 7 years you're looking at right there. But that is pretty. So, I kind of like it. I guess it could prevent you from going bearish is all I'm trying to say. It doesn't mean you have to go bullish. You know, if you're picking up a share or two down here, you can always leg in, you know, buy some, come back 2 weeks later, see how it did, buy a little bit more, see how it did come back kind of thing. But it's at the 200, decent little pattern on the monthly chart. I'll just might as well just post it on there. Fun trend line on SAVE. Just a level to watch. Long-term price. All right. Category, trend analysis, tags, Spirit Airlines, and boom, boom. Okay. That's what I got on this one. Mila posting something about Eiffel Tower patterns. Let me throw that into Slack so that I can read over it. Okay, I'll check that out. Thanks, Mila. Always good to read. Okay, that's my thoughts on Spirit Airlines. That's all I really got. Next on the list is weed. And not much is happening on this one as there was a holiday today and the markets were closed in Canada. But I know about 12 traders who are pretty happy with the movement from Friday. So if you're one of those traders, pat yourself on the back. Go make yourself a martini at some point this week or weekend. And let's hope she keeps running for you. It's a beautiful triangle, nice move, nice gap, nice sideways action. Gorgeous. All right, next on the list is Intel. And I was looking at Intel, some of you might remember from Friday to possibly gap down because you had this one black crow on it. And, you know, if it did gap down, I was going to kind of day trade it. Obviously, Intel gapped up with most of the market. So nothing exceptional on Intel. It's just in a little bit of a bullish trend. Continue buying the dip if you're playing it. And again, if we just go back to the monthly chart, that's the 12-month chart. That's a long chart. Here's the monthly. And the monthly says to me we're going to keep on going. So I can't really figure out this pattern because this looks like a 1, 2, 3, 4, 5. I'd have to measure it to figure out exactly if this wave, I could find out really quick. 1262 to 28, that's 100%. It's close. It looks like wave 1's a little bigger than wave 3, but that looks like a nice pattern. Anyway, Intel almost for sure will slowly catch up to these levels up in here. It's just going to take some time. And, you know, had a big tech bubble, had this big move. This was a survivor. And just, I know I haven't mentioned a whole heck of a lot about it. And well, I guess it depends on where you're watching and what videos you're watching of me. But I still think this is what the Bitcoin chart will look like in the next few months and years, give it 2 to 3 years. So this is what the weekly chart of Bitcoin looks like. This is the monthly chart of Intel. So I think it'll do the exact same thing picture-wise, just over the course of less time. So if this is 16 years, Bitcoin probably does it in 16 months. Maybe less, but that's just my thoughts. It's just what I'm betting on. Betting is the right word. So anyway, Intel, I do think it makes it back up to its previous all-time high 2-3 years from now, max. 75 and some change. Looking good, Intel. Next on the list, we got ADMS. What is that? ADMS Pharmaceuticals. This is also the monthly chart. Not a lot going on there. Let's go to the daily. And the daily, yeah, it's just trying. It's trying to do something fun. So if you go to the long-term moving averages, I mean, it's just a little bit of it's trying its best. So retesting, chilling at the 100. Here's the weekly. So you got a little bit of a resistance back from 2016 that we were retesting right now. So if you're in ADMS or you're looking at being in ADMS, I think the pullback is the best play to approach. Maybe snag a lag, a share at 30 and some change, maybe a little bit lower, maybe even 29. But I think the dip bounce should make sense. If we take out the low of the May 17th candle, I would propose that we would go a little bit lower. That's what I got so far. Any questions, concerns, thoughts, oppositional viewpoints of any kind? Righteous. All right, next we go to Philip Morris. And Philip Morris, ticker symbol PM. Getting about as close as it can. We're probably going to get stopped out of this one tomorrow if she continues in that trajectory. Keeping the fingers crossed for a nice bullish gap or something, but doesn't look like it's going to happen. So we'll update that later tomorrow. It's a September call option. So might try another September call option, just even cheaper. Maybe this one looks like it's going to just try to stop us out right before it bounces. So if that happens, we might scale into one again and just have like an absolute zero play on it. Because Philip Morris, I mean, you know, Philip Morris. It'll bounce at some point. Here's the monthly chart, just this particular charting, and it was at the 100 monthly simple moving average. So we're just kind of hanging out. We'll see. I mean, it's going to happen pretty much any day now, more than likely, unless we get a brilliant gap tomorrow on PM. BMY is kind of similar. So BMY had some good movements. It did retest a little bit. This is an evening star reversal right here. It's not the perfect one by any means, but it's not bad. So if we break lower on BMY, I'm kind of hoping that this becomes an inverted head and shoulders pattern. So I'll hold the 78-cent stop because, again, this is a July, but I won't give it a whole massive amount of time to really play out. It had a really good move last 2 or 3 days, but it's just kind of chilling at the present moment in time. So let's keep an eye on it. If it takes out the low and really breaks below our stop, we will probably plan to get stopped out. Put it into the brain Brain Networks that we likely get stopped out on Bristol Myers Squibb, and then we just kind of take it from there. And again, maybe she doesn't. Maybe markets will move higher. Or not markets, but BMY moves higher. So again, a lot of the trades that we're in are bullish, and the markets are going bullish. So I'm not really too upset about how everything is transpiring. Here's AAOI, which similar standpoint on AAOI. I kind of like the candle. Again, still kind of hoping I wish I just left that trade alone to get in at 32.20. But it had a little bit of a bullish gap. Here's your exponential moving averages. Doesn't look too bad. Here's your long-term moving averages. They don't look too bad. Here's your weekly. It looks okay. So I think we're going to hang in on AAOI for a bit longer. Wow, I had all these in here like 2 or 3 times. That's weird. Okay, here's EXAS and Exact Sciences. I do want to put AMBA on the list. Exact Sciences, I do like this candle. What I'm going to do is very specifically tell it what I want it to do. And that is close above there before the end of May. So would that be May 30? Okay. So today's note, 5/21/18. I need EXAS to close above 53.33 before 5:30. Otherwise, I'll look to exit on 5:31. Hopefully for a small gain, obviously. And with that being the case, we are at a resistance. There's no massive reason to exit here, even though it is right at an R. That kind of bit me when I didn't get out of AMBA. So that's why I'm saying if it doesn't break soon, I'm just going to kind of bail ship. For right now, just to avoid any kind of weird whipsaw, I'm going to move the stop up barely. New stop, and then I have to wait pretty much the rest of this week to move that again. So EXAS, I'm going to try to give it time because it doesn't look terrible. We've been in this one for most of May. Updated stops. Okay. Updated stop on EXAS swing trade. And that's kind of our plan. So if we can break through, brilliant. If not, so if it does break through, we're going to hold. And if it doesn't, pretty much going to exit. That's the plan. And again, here's the weekly. Weekly chart looks nice. We'll see if she can break. Our stop is still below the 10 and the 20 on the weekly. It's also below the 10 and the 20 on the daily. On the daily. Here's a long term. So our stop, we moved it up a little bit below those long term. So we'll see. This one, if you have a long enough time frame, probably will work out. But that was a bill paying trade for me. I was just trying to see if I can snag a gain. Here's AMBA, AMBA. I did get out of AMBA today, earlier today for a small gain. Most of you can still do the exact same thing. Earnings is around the corner, and I guess this was the resistance. Only reason I did not exit there is because I didn't have a hold position. If I did, I would have gotten out. I was at like 0.82R. And then when I had one trader who did get out there, I was like, you know, that's probably a really good thing to do. May's been a battle anyway. Let me just take that off the table. And as I was typing that in, because remember, I have to let you all know what I'm doing before I do it, or at least I don't have to. That's just kind of my code. That's what I want to do. I do my absolute best to let you all know what I'm doing before it happens. So you at least know why. And it just, huge white candle, did everything nice, trade right to resistance. There's the daily, here's the weekly, you'll see it, that 100 on a weekly. So had I had a full R of risk on the table, certainly would have exited there, no question. There's a half an R of entry. And so now you have a pro and a con for half an R. All right, the pro is if you do have an R trade and it does work out, you're not in your full position, you're not making as much as you could have. I guess that's a con, not really a pro. And a pro is if you do get triggered in, you know, most people stress out less about it because it's easier to hold. Less buying power. If you get stopped out, it's not a full R of loss, all that kind of stuff. But anyway, out of AMBA. Oops, did not mean to do that. Put those lines back on the chart. Let me delete this. And take this off right here. Okay, so that's pretty much what I got for Umbrella. Earnings are around the corner. If it trades back down to 46.48, might snag it again. All right, so I got a trader commenting on the target trade. Let's bring this up and see what they said. It's going down. We will see. So this is the target pre-earnings I just posted, you know, not too long ago. Reply, we shall see. It's a coin flip, usually. All right. That's done. AMBA, out of AMBA. I believe we updated that on the worksheet. Yep, we did. Okay. Next on the list is going to be Goldman Sachs. Not a lot to talk about on this one. It did close up 0.3% from the close of yesterday. It did have a relatively decent gap. So I would obviously really like this to be some type of Morningstar bounce where we do bounce. And I will be watching Goldman Sachs tomorrow morning to continue the move. Because that's the bullish gap on the hourly. Here, sorry, the daily. Here's the hourly. You can see a nice little bullish gap on the hourly, some high wave candles. So if we gap up or having some good moves tomorrow morning, that should be relatively nice. What day is today? The 21st, Monday, Tuesday morning, Goldman Sachs. So I'm gonna watch this one as well, just to see. And secondly, on the weekly time frame, so we are in a bull put spread on Goldman Sachs, and I love the fact that we have a new weekly pattern, and the 100 is at 224.23, giving me a little bit of wiggle room just in case we get a big sell-off. However, as I mentioned earlier, this could be a bear flag, or we could be bouncing at this spot. And unfortunately, I really do not know which one is which. You do have some bear signals for sure, but you also have some bull signals. It's a pretty mixed bag, and that's why I went with that bull put spread. I do kind of like the movement, and if we do go higher and we start making some nice moves, I think this will be where that kind of that higher low double bottom would be coming in. And if we do rotate back down to here, you know, we'll see if we can bounce. Sandra says, is it a double bottom on Delta on the daily? Let's put Delta on the list for tomorrow, and we will check it out. ANET, A-N-E-T. So ANET, Arista Networks. All right, so Matt and a few other people have a put sale down here at 210. And it's just holding strong. So you got the 200 at 231. That premium will slowly evaporate. Let me go ask Matt if he still has his put sale. Still have the ANET put sale at 210. So we'll see what he says. And I do like this little Morningstar pattern. I do like the gap a little bit on Arista. So if we zoom in here to like the 15-minute chart or something, here's the 15-minute chart. And it looks pretty good. I mean, quick move this morning. Here's the daily. Again, if we go back to this level, here is your Morningstar kind of a pattern. It almost opened above that high. Almost. So, ANET. See what you got. APPN, I hope that's not Blue Apron. Nope, okay. APPN, oh yeah, I like the look of this one. That's right. I really like this consolidation off the 200. Let me kind of plan this one because there is your pennant pattern. And if I buy here, I'm gonna leg in with half an R more than likely, and then try to get it just a little bit lower like here for the other half an R. And the stop down here is super conservative. I don't think I need to go that low. I mean, if it breaks below that white candle, the trade's not really working. I would almost prefer that to be the case. But let's come back and look at this one tomorrow. Could also be a breakout, but as you all know, if I'm trading bullish, I like to try and get it as cheap as possible. So good resistance. It does look like a retest. You got the long-term moving averages. All those look good. So APPN on the list for tomorrow, and we'll just see how she looks. We've removed some risk off the table by exiting AMBA and by exiting ACAD. So I'm totally getting to trade something else. And whatever I trade now will probably go into June. Here's PAYC, Paycom Software. Paycom, looking rough. That looks like a Head and Shoulders to me. Did not see this one, unfortunately, or if I did, I'll remember it. Black candle gapping down, retest gap. There's the retest, and here is a really pretty evening star reversal pattern, and entry would have been right below that. Stop would have been in that gap. Quick 1.5 Rs. Didn't take it. I can see the chart pattern of why I would have done it. That's really all that matters. Burn into your brain so that the next time it comes around, maybe you do play it. Paycom, I heavily doubt it's going to do this anytime soon, but it would have been a nice bounce off of the 100. If it closes below the 100, it shouldn't be that bullish, realistically. However, this could be a nice little double bottom where she slowly kind of peels out of here. Right, because it did come back down to that equal low, which is one of Sandra's favorite patterns. This is just happens to be on the daily chart. So, right, so it came down this low, came back up, came down to equal low right there. And, you know, whoever went bullish there the first time is trying it again. So let's put that on the list for Wednesday and see if PAYC breaks support or continues higher. Next on the list is CME, making good time today, doing good, feeling good. CME group off of the 100. This is the weekly chart, nice trend, nice dividends, churning and burning. Yeah, CME looks solid. Dan throwing out some stocks for me as well. All right, sir, and we'll put those on the list as we go on. HST, NXPI, Boeing, and CAT. Thank you, my man, for your contribution. I appreciate it tremendously. We got a little bit of resistance here. What's interesting about CME is this is a nice new white soldier. Yesterday had a lot of bearish volume. You're making higher lows. I can see this little popping out on CME group. Let's see if that happens. Boom, boom, boom. We're going to come back and look at this one on Thursday and Friday and see if we can catch it, but she looks relatively okay. Perfection in a bottle. Where's my drawing tool? There it is. Okay, CME. Gonna watch that one for a little bit of a pop. Next on the list is iRobot, IRBT. And iRobot is trying its best to hold on. Had some good news, came out some good news. This was like a longer term rollover, right? So did this, came all the way back down into that previous support and traded to that support level. So on iRobot, this one is, I mean, it's doing its best. Here's the weekly time frame. Inverted cup and handle. Yeah, or H pattern, or whatever you want to call that pattern, but I think we can see the sentiment. Some type of preliminary double bottom. I guess a double bottom could be like an inverted cup and handle type of thing. It happened back here in October, November, December, as you can see, the old double bottom pattern. So if you're looking at playing iRobots, this could be a fun little move. Let me just see where those exponential moving averages are. 50 is right there. All right, I'm really interested to see how we play this 50. Something like this. Sharon says the coffee is spilling. Yeah, inverted cup equals no liquid inside. Hashtag gravity. I like it. iRobot, going on the list for Wednesday. We're going to come back and look at that and just see how it's interacting with that 50 EMA. Just a really quick update. I'll pull up the calendar really quick. I think most of you are fully aware of this, but just in case. The markets, at least the US markets, are closed a week from today. So, yeah, go enjoy your weekend. Don't be here. I won't be here. Next week, I'm going to be in Houston this week right here, working with a real-life trader. Have the Houston meetup on Wednesday for anyone in Houston. Sharon and Donnie Baldwin are going on their cruise to Alaska as a nice, well-deserved reward. That's pretty much it. As far as right now updates, June, there will be a real-life trading meetup on the 13th of June in San Diego. And I might meet with some traders while I'm in LA. We'll see how much time I got. Maybe Thursday, but feel free to let me know. And then the open house week for real life trading is right around the corner, June 18th. So that is 1, 2, 3, 4, 5 weeks away. So if you have coworkers, friends, or family, pastors, doctors, employees, employers who might want to learn what you're doing, they can at least get some really nice educational environments on that week. And those are really the only big updates for right now. I don't know exactly how we're going to handle Independence Day yet. I know the market is closed. I don't know if I'm taking a vacation or a trip or something before or after. I'm really not sure. For those who are here, if there's anything special that you're doing, maybe let me know and I can figure out if everyone's leaving. Usually I ask you fine folks if I'm doing a vacation, like, hey, when's everyone's trips planned? So if they're like this weekend and there's not going to be anyone here, then maybe we take those days off, or maybe take these days off, or take none of them off. I don't know exactly how that's going to work out yet. Thinking through that one. And then I'll be in Minnesota at some point around here. And there'll be a real life trading meetup sometime at the end of July up near Jane Gerard's castle. And then nothing really planned in August, and then September the retreat. Okay, cool. That's like a little bit of an update. A little bit longer than I wanted, but I'll do it again, don't worry. But yes, next Monday, no one will be here. WDC. So WDC had a little bit of a bounce. I did cancel the weekly options newsletter setup. It did not fill for me or anyone else that had the exact option setup that I did. New one coming out next week, but it did have a beautiful candle, nice looking candles. Here's your weekly chart and long-term moving averages, should be right here. For some reason, I'm getting this random error that happens every now and then. But anyway, if you go over to the daily chart, which I think, nope, it's not loading those either. Well, let me just close that one down and start another one. It's easy. Easy to rectify. Okay. Charts. Let me pull the charts up really quick. All right. So really WDC, I'll go back to that one. There are some traders who are in with shares and some other kind of setups. You know, this is a nice looking pattern. You are at the long-term moving averages. We are gapping up a little bit post-market, very little bit. So I think you might want to hold this one because if she can break these long-term moving averages, it should run pretty nicely. So kind of give yourself a time frame, like a week. By the end of the week, if she doesn't break above 88, 89, maybe just sell for a profit. I know Angela took some WDC positions and Yates and a few others. Mark McCauley did really well. So yeah, if she breaks above there, crush it. All right. Next on the list, IQ. A lot of people talking about this one. They really liked Ashley's IPO article. And really just a lot of people were just buying the dip. Around 2051, or some people also buying the dip off of this perfect neckline right there. Something like this. Now really, however you're doing it, I think the dip buy makes the most sense. Ashley and I picked up a share or two during and after kind of that IPO write-up, and you know, interesting proposition. We'll see what happens. INTC opens first offline on-demand movie theater. That's kind of cool. Let's read up on that really quick. Beijing, an innovative market-leading online entertainment service in China, today announced it officially opened its first offline on-demand movie theater there. Interesting. INTC will be bringing the UK movie theaters to first and second tier cities throughout China. First and second tier cities? That sounds rough. I wonder what Nashville, I think it's a second tier city. What's a third tier city? Is there a fourth? How many tiers are there? Theaters combine the convenience of on-demand service with the high-quality audiovisual entertainment of traditional cinemas. Users are free to select time and location of viewing, as well as the content from its online movie library. I gotta admit, that's pretty sweet. Pretty cool. Take a note of that. Anyway, there you go. So maybe that news will help propel it a little bit. It's not going to go to 100 tomorrow, but I do like the gap, like the volume, like the retest, like the moving averages. The 50 will be born soon. I think IQ goes higher. Just an FYI, I like you all to get everything first. We do have a new IPO article that has hit the website because there's just a lot of them coming out. So here it is. You'll be getting an email on it tomorrow, but if you want it early, it is right there. Okay, next on the list, BIDU. And BIDU getting wrecked today. Down 5%, huge candle, massive volume. It was a chief operating officer exiting. Big gap down, just a lot of people trapped. So the weekly time frame will be a pullback opportunity, a buying opportunity on a pullback. So you kind of broke through the long-term moving averages. We'll see. I mean, BIDU is known for traps, and that's a really, really good one. I did not get a chance to day trade BIDU today, but I might keep an eye on it tomorrow, the next few days. If we trade sideways and then break lower, we'll play it, and then from there, I'll watch and see if I can buy a dip of some sort or magnitude on BIDU. But she needs a little bit of a pullback, so, you know, we'll see. But I'm going to write BIDU later in the week. And then I'll watch it tomorrow morning as well, just in case. I mean, it just started the move. So I mean, if it gaps down tomorrow morning, it could easily continue lower. Okay, here's Facebook. Ticker symbol FB. And Facebook up 1% today. Kind of a cute new white soldier, which is a you know, pretty decent gap. Black candle, the low and the close, almost a shaved bottom candle, 7 cents away. So Dean has a few put sales on Facebook. I'm glad a lot of you, the vast, well, I shouldn't say it. Let me rephrase it. Anyone who traded Facebook throughout here, those who played it well and patiently did very well on it. With put sales, unraveling bull put spreads, buying shares, buying longer term leaps, selling longer term put sales, when that was all occurring, it wasn't big freak out mode. You did really well, so congratulations. We talked about that in depth, and earnings were just sensational. Stunning growth. Double bottom, right? Nice little retest. So there was a lot going on Facebook. As Dr. Falcone mentions, tons of fun. So yeah, you know, it recovered, figured it would. Nice pullback, needed a pullback. Obviously, we can see it was a bearish gap and go, and there were some really good opportunities to make some bearish money. I mean, we did day trade this, and we did have a really good time in this range. But back when it was here, we mentioned that it would rotate higher, trade down, and then bounce. And anyway, if you're in Facebook bullish, stay that way. Looks good. 2 left, EVHC, EVHC. And this one we're going to want to start keeping a close eye on, as you guys can probably see why. Just from looking at this channel, this candle, this pattern, I'm just going to start planning it now. I like the gap, and I'm interested to see exactly how we play this one. This will just be like the first iteration of the plan. Let me see if there's any long-term moving averages or something in the way. I don't think there is. Nope. It's a good looking move. Yeah, we're going to try to play that one. Come back to that tomorrow and see what we see, and then playing it accordingly. And last but not least, this is one we talked on kind of in depth on Energy Wednesday. And there is a real life trader or two playing HK. It was up a little bit bigger than it is after hours. After hours. Here's the 5-minute chart. And, you know, it was up to about 580 and some change post-market. Pretty decent little bullish gap and go. We'll see how it opens tomorrow morning, but it will be one I'll watch for day trade just in case, because an open above 571, 572, and I'll be looking at a day trade, maybe even a swing trade. There will be a few things that I will be looking at. So HK on my list for tomorrow. Ladies and gentlemen, best 60 minutes on the internet still. Let's go through what we're looking at tomorrow. Yelp, YEXT, Seagate, that one, Delta, APPN, HST, NXPI, Boeing, Caterpillar, EVHC, Amazon, Netflix, Google, Baba, Apple, NVIDIA, AMD, got CAT already on the list, got MU on the list, DE, I will add, Tesla, SBLK, cool. Well, my friends, guess what? Tomorrow, same time, same place, same missions, to enrich lives. Appreciate each and every one of you being here. Thanks so much for all of your energy, for helping me enrich lives, for trading with me, paying off debts, making money, helping people, growing, traveling, making new experiences, seeing the world, making the world a better place. You're amazing. And until next time, love life, and trade it. Bye.